helped me through the process. So uh, all us old guys need to figure it out. I
And
just invited you, brother.
share it to one. It's like 2 a.m. in Italy. The
Yes,
guys,
he's in. He's in.
Hey, old my
Hey.
ass.
Jamie, are you on a phone or computer?
I'm on a phone. You told me, right? Phone?
Perfect.
Oh, crap.
Yes. Yes.
But I don't know how to do a camera now.
Let's see.
Oh, there we go.
Try now.
Connect. It says I'm going to connect using audio only. Oh, there we go.
You should see a video button there. There you go.
Yes. All right.
Look at that.
Jason, you want to switch us? There you go. Perfect.
I got my fancy camera at the office for nothing. Look at fancy.
I know,
Oh, this
right?
is actually kind of cool. I can walk around the office. Hey, you know what? The only two people left at head office today is me and our lawyer.
Oh, nice. Nice.
Yeah.
Nice.
Jamie, you're gonna get hit with all the questions, man.
Yeah, he was already in here and I shut my door now.
Yep.
So,
We're gonna
yeah,
give you the
I'm excited to
spotlight,
be on here,
folks.
guys. Appreciate you having me, Jason. This is actually my first ever TikTok live, so hopefully it goes well.
Well, I'm gonna have to throw myself under the bus. I didn't know anything about TikTok Live until Mayor and Prickett invited me to their fiasco the very first time and showed me how to do all of it. And
Cool.
I'll tell you this, Jamie, it has generated some business for me and brought on some new agents for us.
Nice.
So yeah.
Awesome.
I think last base we did
Is there a way to
13.
share this on my TikTok? Because I don't have much going on mine, and I'd like to get some attention.
Yeah. So there should be three little dots at the right hand corner, and you're gonna scroll down until you see a share button. And I'm actually gonna share this to my story as well.
Oh, I see a share button. Oh, I can share it on Facebook too.
Oh man, he's gonna have to figure out how to come back. You guys are just clicking share button. That's what happens when you have an Android.
Hey now, hey.
That's what happens when you have an Android. Share button and you go away. Michael wants to hear his backstory.
Yeah. So Jamie, tell us a little bit about your backstory. Tell us who you are and how you're building this great organization.
Well, great question. When we started, we didn't have this big dream of riches and everything else. Matter of fact, we never had a dream of that. That wasn't the important part to us. The important part to us when we started was like, I just have to pay my bills. We were struggling ourselves. Like, we weren't this big success story coming out of the company I spent 10 years at. We then left that company and became independent agents, and we bounced around a little bit, kind of feeling out the industry, and fell in love with the industry again. I guess you could say we got reinvigorated after 10 years with one company not achieving big results, and then 2 years as an independent agent achieving some level of success. My wife and I were able to buy our first home together, and started driving a car that wasn't falling apart, which was a big plus. I was able to fill up the gas every time I went to the gas station. So these were all big wins for us. And we thought to ourselves, why isn't there a company that's taken the good from these models of like recruiting and rah, 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 and all this other stuff, which I love, but put like real compensation into the game, like make it fair for producers, not just the intergalactic superstars that become uber successful because they have 5,000 minions under them and they're the only ones making any money. We thought there was a way that we could have a win-win-win scenario, win for the agents that are builders, win for the agents that are producers, and of course win for the clients that we're serving. And we put our heads together, prayed about it. We thought we could find a company like that, because I didn't know the first thing about starting a company. And we ended up figuring out real quick that there's nothing out there that we felt, and again, this is my personal opinion, but we didn't feel like there was anything that was lined up in terms of the structure that we would feel good about. There were some that were close, but it wasn't perfect. And what we decided was, if we want to do it, we're going to have to build it ourselves. And, kind of started off in Guelph, Ontario, my hometown. That's where I am right now. and we expanded all across Ontario, Canada. We thought we were pretty big when we had 100 agents. We're like, man, look at us go. Like, this is amazing, because we'd never done that in 10 years combined at our former company, right? And then all of a sudden it started becoming real when we started to attract some other higher caliber agents in terms of people that have built something before in this industry. And we started thinking bigger and bigger as time went on. We never knew that. We always dreamt, I guess you could say, that we're going to be so big, this and that. But until it started happening, we're like, man, this is like, we have to pinch ourselves. I'll tell you, I was at a barbecue yesterday at Morrow's house. Morrow's one of our great leaders in the company. And when I met Morrow, he could barely afford groceries. And now here we are hanging out. He's $1 million earner, and he pulls out this watch that he just bought with his one bonus check, and it's a Cartier watch worth like $25,000. And he's not a real materialistic guy. It's more like, it was like an award for himself, because he's starting to get these bonuses every month and stuff. And it's just like, I was talking to Morrow, I'm like, dude, do you remember where we came from, man? Like, he came from the same company I was with. He was there for 19 years. He's like, bro, we were so broke, yet we were trying to sell the dream. And I'm like, man, this is crazy that here it is that people are actually starting to have success. And that's all we ever wanted in this company. If I died today, I would die an accomplished man that, I accomplished what I set out for. Now, that said, we're only about 0.1% of like what we're going to do in terms of the impact. But by accomplished, I mean that we set the foundation, and if we happen to die tomorrow, this thing's going to continue on without us. And we just love that it's impacting lives at the end of the day, because that was our motivation. We were struggling ourselves, and we knew that other agents were struggling, because heck, we did better than some of the agents out there in these companies, and we were still struggling. So that's kind of, I don't know if that's what you meant by backstory, but we just wanted to build something that was real.
Awesome. Hey, we got a great question for you, by the way. A guy named Daniel Hanks is asking, is it true that Eric Olson was in negotiations with you to join Experior?
Yeah, no, that wasn't true at all. I met with Eric. He was introduced through a mutual party that we know, and he basically was coming into Canada around that time, and we were already pretty big in the U.S. I don't know how big GFI is, but I'm pretty sure that we're a little bit bigger than they are right now, and they got big real fast. Don't get me wrong; they've done a great job. But I only count licensed agents. I don't count warm bodies and people's uncle who died 10 years ago. And I don't count dogs and cats. I count like actual licensed agents. But I think we're a little bit bigger than they are right now. But nonetheless, they built a great big business really fast. He had a lot of influence. People that know Eric's story, he was one of the biggest earners at World Financial Group, which is a large company. But no, when we talked to Eric, he was talking about coming to Canada. But I made a deal with another agent that I would never, ever allow Eric to be affiliated with Experior. So it wasn't even like I was trying to get him to come under us in Canada. I was literally saying, because of a mutual acquaintance that we had, that, hey, yeah, I'll let him know the ins and outs of Canada if he wants to have a talk with me. And we got on the call. I could tell real quickly that he already kind of had a plan, and he was just kind of playing around, just hearing out what I would say about it. So I think he already had kind of a plan. And then he made a comment to me. He goes, well, if we went with you guys in the Canada market, because you're the king of Canada, was his words, and I'm the king of the U.S., were his words. You come under us in Canada, we'll go under you in the U.S. To which I said, nah, we've already got a good thing going, and we're just not interested in that. And that was the end of the conversation. Fast forward a couple weeks later, and I thought we'd left on good terms. There was no bad blood there. But fast forward a couple weeks later, a lot of his agents started telling our agents that, yeah, Eric, we're going to buy you guys. We're going to buy Experior. And I'm like, what? Where the hell did that come from? Like, I basically just said, no, this isn't an interest of ours. And yeah, so that's kind of how that went down.
Maybe the most popular question that we're getting on here tonight, and I think is the most common criticism that you're going to get, or Experior just gets overall, is LOA, assignment of commissions, direct to carrier, all that stuff. And we might need to explain it slower for the people in the back, but that's kind of the main question.
Yeah, no, for sure. First of all, whenever someone says something like LOA means that, the agency owns the book of business or the IMO owns the book of business. All that tells me is that that's someone that's not educated about the business, like the intricacies of the business. And I'll tell you why, because the ownership of a book of business is not determined how you get paid from whether it's a carrier or through the IMO. It's determined on the contractual relationship between you and the IMO. So when we have the LOA model, the reason we have it is for protection. Okay, that's the number one reason. There's other elements to it, but the number one reason is protection. And what that means is when you think about an agency owner or someone that's building their own downline of agents, one of the risks is the roll-ups, right? Someone leaves the industry or they walk away. But here's where roll-ups really get ugly is when agents decide that I'm going to stop selling with this company because I just got a chargeback, so I'm going to start selling with this company over here. Meanwhile, the agent upline is now responsible for the roll-up debt. And this person's still making money over here. So by doing an LOA model, bringing everything into our grid, everything offsets everything. Even if some of our carriers pay like a 9-month advance and then the rest on months 10, 11, and 12, very few, but most are 100% advance now. But the ones that do that, even those renewals that are coming on the back end, those residuals on the back end, go to offset debt, which protects the recruiters. And it protects also the agents from doing stupid business and then ended up not having a career in the industry because they're vectored to death. So it's actually a protection mechanism. And the contractual ownership that our agents have is very simple. It's your business from day one. We don't hold you if you leave. That's it. Even though other companies, the agents are paid by the carriers, that also doesn't mean they own the business. So again, I'll repeat what I said. How you get paid, whether it's from the carrier or from the IMO, does not determine whether you own your book of business or not, because there are many agents that get paid direct by carrier and still do not own their book of business. And there's also many agents who are on LOA and don't own their book of business. Paul, the reason I think that this LOA nonsense turned into nonsense is because of the dumbasses out there that play with the people's lives. It's because of the agencies that do run LOA and they screw the agents when the agent leaves, and the agent can't do nothing about it. They don't have a contract stating that they own it or anything else. Our LOA model is so cool that we've had agents leave us. One of them was one of our top personal producers in the company. She quit Experior 3 years ago. She actually spoke at one of our conventions. You guys wouldn't even know her. But she just came back to Experior almost 3 years later. Why? Because she saw how we treated her when she left. And when things were ugly on the other side, she had the carrot dangled in front of her. She decided to come back. Also, another guy in our business, Simon. Simon, you guys know him. He's making $500,000, almost $600K in income. Simon joined us in September of 2022, I believe it was. He quit in September of 2022. So, but in that 2 weeks, he wrote like 5 or 6 F&G policies. We didn't even get commissions on it. And as soon as he sent in to transfer, he was going to another company that ended up actually going out of business within like 6 months. But he got the big carrot dangled. We released his business. 6 months later, we didn't even get paid on the business because we just released it. We don't hold people hostage for any length of time ever. And he came back to us 6 months later. Now he's one of our top producers in the whole company, top personal producers, building a big hierarchy now as well. So we
got somebody in the comments, and we know her pretty well. Her name is, well, I guess I don't need to say the name. I think you can see the comments, but
I can't see any of the comments. But
okay, got it. Well,
I'd rather stay neutral and not know the names anyway.
We've got a successful IMO owner actually on here. It's a couple, Daniel and Elisa, and we interact with them quite a bit. But Elisa has some comments on here that I guess maybe it's a follow up or not. I'm not too sure, but just acting moderator. Lisa says they still contractually owe the debt. If you say they own the book, they owe the debt. And then people will use certain words to be tricky with the wording on LOA. And I guess the way you're describing it requires that you have to have a contract in place in order for the LOA to not mean Experior owns the whole thing.
I don't understand the question, but here's the bottom line. We don't use tricky words. We don't use anything to abuse agents. Whatever, I mean, you might be commenting on here for attention. I'm not sure what the intent is of that question. But all I can tell you is that our agents own their book of business. We transfer them out. They keep the business. As As a matter of fact, we don't even keep anything. We don't own anything of their business when they decide to leave. It's their business. They take it with them. We've been doing it that way for 5 years in the U.S. and for 11 years in Canada. We've never deviated. If they do have debt, if that's the question, then no, they won't be able to transfer the book of business until the debt is paid off. That's just common sense, because we're not going to let someone take advantage of us for $10,000-$20,000 and then just we let them walk out the door. But that's the same with any carrier. That's and they get back to it, of course, and everything else. So,
Jason, this is your live. And Jamie, obviously, you're the guest. So, are you cool with people coming up, like people from outside, just asking questions, having a conversation? Is that cool?
I love the questions. I think this is a great way.
I'm actually going to bring Elisa up, the person who asked the question. You cool with that?
Yeah,
for sure. Bring them up.
All right, 1 second. There you go.
Jamie, I didn't get to see you at head office today.
Hey guys.
Oh, I'm here right now. Hello.
Hey Jamie, how you doing?
Good. How are you?
Good. So I own IMO as well. It's not nearly as big as Experior, but we're very new.
Yeah.
And I the concerns around LOA, it's not people being ignorant. It's not people being uneducated. It's facts, right? Because there are concerns around LOA style, because at the end of the day, you have to have a contract in place in order for the agent to own their book, because in an LOA model, you automatically own the whole book, the top entity. So the contract that you're putting.
Hold on, Elise, I gotta correct you on that. First of all, it is because of education. People are uneducated about it, and when you say it's because of facts, that you're not making any facts. The fact is that the contractual relationship between the agent and the IMO will supersede the relationship. If this goes to court and we say that an agent owns their book of business, that contractual relationship supersedes an LOA. An LOA means nothing.
That's my point, though, is that you have to have an additional contract in place in order, right? So whenever agents see that it's an LOA style, they automatically are going to assume that the entity owns everything, because because that is a fact. You, however, have put an additional contract in place in order for that not to be the case for Experior. However, you still have more control over their business, because if they do one little thing outside of the contract, you can take their whole book from them.
Incorrect. Completely incorrect. Your first part, you were bang on. The second part about any little thing they do wrong, we can take their whole book. That's not true at all. We've actually had to terminate agents because they were criminally negligent and had issues beyond even regulatory concerns. We terminated them, and guess what? They still own their book of business, and we still released it immediately. So no, there's no other red tape. There's no fine print. Matter of fact, if you guys want, you can pull up our damn contract right here. We don't hide anything. And a lot of the agents that we bring on, because they're big players now, not a lot, but a handful of big players that we're starting to attract, they read these things with fine-tooth comb, but they also consult legal. And we've never had anyone ask us to change anything in our contract, with the exception of if they're writing outside business with carriers that we might not have. We do exceptions and say, hey, no problem, we don't have the carrier, we can't honor that, so we're not going to cut off your legs.
And that's because you seem like you're a good guy, and you're not gonna try to use the contract against people to hold things, because you want to have that reputation as the IMO owner that is willingly releasing people and letting them leave, and showing that, yeah, I say you own your book of business, and if you want to leave, you can take it with you, right? So you're holding that standard, which is amazing. I think that's great. However, the industry, most leaders like you in this industry are not doing that. And 100%. At any point, if something ever happened where it was questionable, you could have the power to take somebody's business over something, like you said, debt, for example.
Yeah.
If
Yeah.
somebody had debt, you could take their entire book from them. At the end of the day, the
No,
carriers,
but again, it's not taking their book from them. If first of all, someone has debt and doesn't pay the debt, to me, having debt and not paying your debt is the same as stealing, especially when these are advanced commissions from a carrier. So of course, if someone's going to steal money from us, we're not going to release the book of business until it's paid off. But that's the same that carriers operate the same way.
Yep.
And then if they're vectored, they're not going to be able to get contracts elsewhere, other than there's a couple companies that might let someone slide if there's a good relationship with the IMO and they agree to pay it back over time. But I couldn't agree with you more, Elisa. As far as other owners in our position, I'm blown away by the lack of integrity in our industry. I was talking with a group of our colleagues yesterday. I was at a pool party with a bunch of our great guys in the business, and we said, like, it's insane how unethical our industry is. And you sound like, by the way, that you're looking to protect agents, and that's good on you. All I'm stating is that our LOA model takes the protection that you want to provide to your agents, Elisa, and it brings it up another notch. Because now we're not only protecting the agents that are building. Sorry, I should say we're protecting the agents that are building agencies, which is one of the big attraction pieces to our model. Is that agents want to recruit and build a downline without having the model in play where everything can offset everything. It leaves recruiters in a very vulnerable situation, because people do unfortunately go from writing one carrier to writing another when they have a debt. But with us, there's never going to be that bias, because it's like, if you have a debt, the debt has to get paid off before you're going to get paid on another sale, right? So it really just puts in protection for people that are in a recruiting model. But to your point, a lot of people have abused it, and it's frustrating, and it gives us a bad name from an LOA perspective. But typically, by the time I have a leader looking through our contract, reading through it and everything else, I usually win them over to our side anyways.
So you're saying that the debt is being protected because all of the carrier commissions are being clumped into one.
Correct.
And if I have debt with Mutual of Omaha, I can't go to Transamerica and write a policy over there and avoid Mutual of Omaha to not have to pay that debt, is what you're saying.
Exactly. Yeah. And listen, if people make a habit of getting into debt with different carriers and running away from their problems, they're not going to like that very much. But I know that it does protect our agency builders, which is a lot of our team, right? A lot of our guys they love our model because, yeah, there's great comp and it's competitive and this and that, but it's also a great place to recruit and build an agency, right?
Yeah, Mayor is saying I should adopt an LOA model. I'm not going to do that. And I'm assuming, Jamie, that you did the LOA model primarily so that you could be in Canada and the United States.
No, that had no relevance on it. No, but the other reason, and I mean, I could go into detail upon detail about why, for example, like our agents are going to save thousands of dollars because many of the states, they're not going to need appointments and they're not going to need licenses in order to earn overrides, depending on the state. So, I mean, there's other benefits to it in addition to that, but the number one benefit is the fact that we're protecting our agents' businesses by doing LOA. By the way, it doesn't really protect Experior because all of our direct people to the company are strong leaders. So I could flip a switch and go, hey, leaders, we're going to now pay agents direct and we'll control the override so we can do the generations. Because, by the way, you can't do generations unless that portion has to be, paid out by the IMO. And I could do tomorrow, I could have a call with we have an executive director call tomorrow. And I say, hey, executive directors, we're getting rid of the LOA model because then it's going to look good to all the people that know what they're talking about out there. And guess what? I would have probably 99% of our executive directors call me up after the meeting and go, are you freaking nuts? You're going to put us at risk like this? What is wrong with you, Jamie? Why would you do that? Because as an IMO with big leaders on the front line making millions, we don't have the risk. They have the risk. So we administer the payroll, put all the money into technology, everything that we do, because we know it's going to protect the people that are building the businesses, right? So again, I get it. I know why LOA is looked down on. I understand. I hear you. Most of the people out there are
it's looked down on because you have to have the utmost like amount of trust in the top entity to properly disperse the. And I've seen multiple IMOs go under, and when it's an LOA model, if you have commissions owed to you and they don't have the funds to pay it, you're SOL on LOA. You know what I mean? So you have to, like, if anything ever happened to Experior down the line, you know, all of the agents under Experior are having to rely on the fact that Experior is going to forever stay solvent. On a broker model, we only have to make sure that the carriers are going to stay solvent. Nobody under me has to worry about if Gold is going to be able to, or if Elisa and Daniel Gordon are going to be able to pay out commissions, because they're getting directly by the carrier.
But then again, you're assuming that you know the financials of Experior, because who's to say that Experior is not more solid and more willing and more able to pay commissions, especially in the event of catastrophic loss, hierarchies split up, start their own thing, whatever. Who's to say that we're not more financially solid than some of the smaller carriers that you might be selling for today?
I'm not saying that because we're bigger than a couple of our carriers. I'm definitely not saying that. However, when you have multiple carriers, if one carrier, if something happens, I can easily, quickly move all my business to another carrier. Whereas with Experior, it's one big umbrella. So the agents under Experior, if anything ever happened to Experior, the agents under that umbrella really have nowhere to go unless they get contracts outside of Experior. So that's the biggest concern. That would be my concern.
So Elisa, in your opinion, at what stage in business does an IMO become big enough that they're not going anywhere? Like
never,
like WFG,
never, because things can happen. Things can happen. There's huge IMOs out there going backwards. Huge IMOs owned by Integrity that can't even keep up with a bonus structure. You know what I mean? So never, because shit can hit the fan at any time.
So then, in that case, you're saying that the risk that all of your team builders are undergoing with the non-LOA model is less of a risk than the risk of going in an LOA model with a company even of the size of Experior, is what you're saying, correct?
That's what I believe.
Cool. So then guess what? We get to part friends. I believe what I believe. You believe what you believe.
Awesome. Hey, Finance with Professor is up now. I want him to take over. I'm sure he has some great questions.
Let's let Alex ask a question. Just quick favor here, Alex, if you don't mind. We're not talking IULs versus whole life versus term versus annuity.
I'm not interested in that. I think we have a professional conversation here, and I'm not.
We're not talking certain companies either per se. So, and Jamie's got about 30 minutes left, guys.
No. By the way, Elisa. Just first of all, I don't know if she's still listening or not, but just I want to say thank you for jumping on. It shows you're very committed to what you're doing, and good job. Keep doing what you're doing. This is a big industry. We can all win here together, and I understand your perspective. Hopefully you understand mine, and good on you.
Sweet. Thanks for bringing me in, guys.
Lisa, for coming up too. So, all right, go ahead, Alex. Sorry, guys.
Yeah, I appreciate you bringing me up. Jamie, thanks for coming on, man. I appreciate it.
My pleasure.
I've just got a couple questions, nothing crazy. So what is your perspective on, for a lack of better words, the IUL pandemic, for if you will, because from my perspective, as well as many others, they're just being completely missold and misrepresented. And I wanted to see kind of what your mindset is and what your perspective is as an IMO owner.
Yeah, I'll be honest with you. It scares the hell out of me. I feel like too many agents sell IUL as a quick solution to all problems, and it's not. It's a very complex product, and if it's not understood, it can be sold and misused, especially, and I'm saying this as a guy that has a company with multiple tiers and recruiting going on, especially in our type of model, if people aren't being properly trained and educated on it. In Canada, for example, we have even more danger than an IUL. We just have a UL, which is just like a variable universal life, and it's run rampant in the Canadian marketplace. And again, we put in a lot of procedures and stops in place that if we see policies are not properly funded, we put stops to them. We have a requirement of uploading KYC, if you will, for the customers, every customer that's sold a product like this. We also require the illustration to be uploaded so we can actually see what the customer's paying versus the target premium and the overfunding amount. But yeah, my opinion is I think it's a dangerous product and it needs to be treaded on carefully.
Cool. Awesome. And then my second question is from a recruiting standpoint, how do I want to phrase this? What vetting, like how did you vet your initial people? And when you were vetting people, what did that process look like? Like, did you have a vision of like, oh, well, this person has great values. I mean, I could see them going far. Were there certain characteristics about those certain peoples that you knew they would grow in a certain way, but also could help your company? Tell me a little bit about how that came to fruition.
Well, I'd say we got really lucky. We recruited a couple cats in the beginning, and it ended up not being so good. But right around the time that they were exiting, leaving us with some debts and headaches and everything else, we recruited 3 guys, Frank, Mauro, Laval. They're still with us 9 years later. And I feel like we recruited the most integrous, ethical leaders that we ever could have from that one company that we took them from. And I really believe that was a snowball effect because all they speak about is doing right by the client and this and that. So we kind of lucked out. Then fast forward a few years later, we recruited another guy that was so down to earth and giving and nice that I thought he was a phony for the first 6 months because I'm like, there's no way someone's this nice and this good with their people. Like, this doesn't make sense. Like, he's stacking people when he didn't need to. And it's like I don't understand. And turns out he's one of our forefront leaders. I don't know. I think we got lucky. I think we attracted the kind of people that we were looking for. But does that mean everyone at Experior is good? No. We probably got some criminals here too. You know, you recruit 10,000 people, you're going to have some bad people, right?
Yeah.
But I'd like to think that for the most part, we got some great people at Experior. And I think it starts with the leadership that we had in the beginning that we really lucked into. My God, if this one person that ended up exiting became one of the big go-to people in the company, we might not have as nice a company as we have today, but I think we just got the right people in, and you know, we're very blessed for that.
Jamie,
What were some things?
we've seen Canadian compliance get on agents and leadership before for selling UL the wrong way, and I know I've been on some of those calls where we've actually talked about that. Can you touch on that a little bit about, is there any plans to expand on US compliance a little bit more than just, because right now they do a good job of, you know, warning us against high volume, right? So we can monitor what's being sold. But is there any plans for US compliance to actually, you know, expand a little bit on maybe looking at that level of what's being sold, right?
Yeah, for sure. We want to be cautious on it. Like, we're not as crazy in the US market as we are in the Canadian market because the products we sell aren't as dangerous in, like, for the customer, the end user. So that's one reason that we aren't as on top of it in the US as we are in Canada. The other thing is the regulators are very lax, we find, in the US on the insurance side of things. But I would say that, yeah, definitely, as time goes on, we want to get more and more strict with what we have coming in the door. But we also want to make sure that we're not turning away agents because they think that we're too over the top, right? Like, there's a fine line between compliance and marketing, right? You gotta make sure it's a good balance. It's not like everything's a headache every time you write a sale and you're wondering if it's going to get rejected or not.
Yeah. I want to swing back to IULs really quick, and without getting too nitty-gritty here. Out of the thousands of IULs that myself and my team have seen, one big thing that really just kind of pisses me off. I didn't say that I didn't want to talk about IULs. I said that I wasn't going to banter about other products compared to whole life IULs. However, this is my last question about IULs, I promise.
Sure.
One big thing that just kind of pisses me off is it doesn't really matter what carrier you have. They always decrease the rates. Some are worse than others. And I always tell people it's not a matter of if, it's a matter of when and how bad. Do you have a certain perspective on that to any regard?
I wouldn't be the right guy to ask, but I would just say that it's unfortunate that they'll do one thing because it looks good with marketing and then it ends up screwing the customer down the road if it's what you're saying. But I don't have a lot of experience in the IUL world. I know in Canada with the universal life products, that is not the case. Everything's on a variable product and, they're investing in the markets. And, in Canada, like the universal life products we sell in Canada, there are some great products out there with great investment options. In Canada, we don't need to have a securities license to sell variable products at all. With a life license, you can sell what we call segregated funds, which is basically a dressed up mutual fund. So we can do a really good job if you know what you're selling. The U.S. market, I can't speak to that. That would be a conversation maybe to get Sean Redford. Jason, if you get Sean Redford on the next call, he'd be more the product expert to answer that.
Right. Yeah. I don't know.
Which products are you mostly selling?
I do a lot of term. That's mostly what my book is. I have done occasionally the whole life in the past. I don't do as much of it anymore. Right now, I'm actually studying for higher level education on planning. So I will be going back to school just for everybody that knows me. But
if you ever look at our model, we've got HPN University. It's pretty slick. It's a lot of planning. It's a lot of the top of the table, $1 million roundtable people. We have our agents get access to that as a part of our back office. It's pretty slick. We've got we provide a ton of training and resources, not just at the elementary level. We even have some guys in Canada starting to get their CHU and CFP and stuff like that. So
nice. That's where I'm going. That's where I'm headed. So I just got one more, if you wouldn't mind. And then
by the way, real quick before you go, Alex, before you say it, I want to say I've only ever sold term life insurance to almost every human being I've ever sat down with in my life, even as we were building Experior. And I've sold, I think, four whole life policies to my own family, myself, my wife, and my best friend. And I've sold one universal life, and it was to myself for our corporation. So I'm a term guy.
That's awesome.
I think Alex should know that your background is from Primerica originally. If he doesn't.
Yes.
Is it really?
I was in Primerica for 10 years. I was an RVP there. So.
Oh, nice. That's cool. That's awesome. I like I said, I've just got one more. I know everybody's kind of yanking my chain about asking 2 questions for IULs, but if you had to,
else on the team would be a better answer to your question than Jamie. That's all.
What's that?
It's not yanking your chain. It's just saying that there's somebody else who'd probably better answer your product specific questions than Jamie himself.
Yeah. Sean Redford is that.
Oh, no, that's fine. I was just curious on if there was a specific perspective that he had from a 10,000 foot kind of thing. That's all I was looking for. Not a debate on this is better or not. It's just what do you see from your vantage point?
I don't mean to keep talking here, but Jamie, just so you know, aware of the TikTok culture a little bit. And Alex isn't doing this, but a lot of the viewership that happens here is a lot more casual than other social media platforms. And a lot of times in my experience, I can't speak for Jason or anybody else, there's a lot of gotcha moments.
Yes.
I'll leave it there.
Yes.
So Alex, go ahead, brother.
I would have to agree with that point. I try not to do that. I think we all know, the regulars know, but if you had to start from the very beginning of Experior today, how would you do it? And when you're looking at recruiting some people, what are 3 things that you would look for?
So God is my witness. If I had to start Experior over today, I wouldn't do it. I would join it because I like what my wife and I went through, and I'm not trying to overemphasize and sound like I'm holier than thou, and I'm a harder worker than anyone else. But I do know we had to put our life on hold for about 5 years, to get this thing off the ground. And now I'm 45 years young, and I wouldn't be willing to do it again. So I wouldn't start Experior again. I would try and find something that's as close to it as humanly possible, or join it if it was around. And Prickett or Jason started it. But 3 things, if I was to say the most important things to me, is integrity, transparency, and work ethic. If you have those, you're going to be an intergalactic star with Experior. If you lack any one of those, you're not going to win here. So that's I don't like people that I can be an ass sometimes, and I come across sometimes like a little hard. But my team and the whole company knows that I've asked people, hey, have you ever caught me in a lie? I mean, I might say like, hey, we're going to do this month, and we fall short. Okay, well, that was a goal and we missed it or whatever. But you're not going to have me come out and say some nonsense that's just ridiculous, like some of these donkeys I see all over the online saying crap that doesn't even make sense half the time, but everyone's following them like blind minions. I just don't like that, and I just feel like if as leaders that we could have a culture and recruit people that had integrity, like real integrity, not like they had to talk about having integrity, because the more people talk about having integrity, the less they typically have. Not that people have to say I'm transparent, although look at them, I'm transparent. Most people that say that are full of shit too. And but people that just actually do it in the way they walk and talk and act and stuff, I think would be amazing. And that's what I look for.
You're not going to go out there and claim you got 40,000 agents?
No, I'm not. No. But you know,
Or going public. Are you gonna?
hey, but you know what? Hey, listen. In their defense, people are buying into that crap. I mean, it blows my mind. People, but it's like, to me, it's like, just do some math. Like, just figure out what they're saying. It's not real, but it's okay. It's all right. The truth always wins, man. I'm here for the long run. I'm not here for a pump and dump scheme. Hey, yeah, we're going public in 5 years. And then what? Everyone else is just nothing for the rest of their careers? Only the few people that, come on. I'm here for the rest of my life, man. I plan on being 90 years old, walking on stage, God willing, and saying, guys, we're going to win. That's what I want. I want to be here forever. I love this thing.
That's awesome. That's awesome. Do you think you'll ever be like, do you think you'll ever grow to a certain point where you just start, not really start, but do you like just will you ever become a carrier at any point, do you think?
Yes.
That's awesome.
Yeah. Probably not in Canada, but we are working on some deals right now where we become like, it's called an MGU. So we're working on some stuff right now in Canada with our volume. I mean, I just feel like we can kind of control our own destiny if we do have our own product in Canada specifically, because there's sponsor requirements for agents and we're kind of relying on insurance companies. In the US, it's a little different. It would be more of a money-making play for our shareholders and to make everyone happier that are already shareholders with Experior, which is our executive director team. But in Canada, it's more of a strategic thing. In the US, it would be more, financial beneficial thing. But we'll never turn into a shop where you got to sell our product. That's off the table. We actually had a couple of insurers, 2 insurers right now that would buy us today or buy a chunk of us today, one in Canada, one in the US, and we've said no to both of them because we don't want to be owned by a carrier, because then they also, all of a sudden, they try and start controlling distribution. Yeah. Right? And we're not looking for that. So,
Jamie, we got another question here. How can somebody give their agents a percentage of their company? It's mathematically impossible.
No, it's not.
Messenger, don't shoot the messenger. Come on.
Yeah. No. So what we do, I'll just tell you how we've done this. So, these are rough numbers, so don't quote me on this, okay? But there's approximately 10 million shares when we start the company. They're valued at half a penny each type of thing or whatever it is, okay? All you do when you add shareholders is you add more shares. So we add 5,000 shares for this one, 10,000 shares, 2,000 shares, 1,000 shares. So we're adding more shares, and there's no limit to how many shares that you can issue of a private corporation. So no, it's not a math thing. I did have some competitor company that was silly that said, yeah, there's 8,000 people that own 1% of Experior. It's not worth anything. And it's like, where'd you get this math from? So far, my wife and I have given 30% of the company to our executive directors who earned the shares. So 30% of the company is owned by approximately 250 to 300 people. I haven't seen the last cap table because we have executive directors and then we have qualified executive directors. So, let's just call it 300. 300 agents own around 30% of Experior right now. Our current valuation ranges depending month to month with our rolling 12-month EBITDA. If we're looking at a 15x valuation, which we've already been offered 15x, so I know we can get that much at least. We're valued somewhere between 150 and 200 million today.
Nice.
So there's there's some transparency for you. Now, that doesn't mean our shareholders are rich, the 300 divided by 30%, but we're not stopping now. We're going to continue going, and we'll be a lot more valuable in 2 years and 5 years and 10 years and 20 years from now.
Raza, go ahead. I have one more, but I want to let you go ahead.
Good to see you, Raza. Welcome to the live.
Hey, man.
Raza
I saw
Beg,
that
the
pop in.
first
I'm like, hey,
six-figure-
let me say
Raza,
hi.
the first six-figure ring earner in Experior USA.
Yeah, man. I was lucky to be one of the top first few that came in, and I believed in the vision. I believed in Jamie's and Leanne's vision of expanding and growing, and I saw the unique opportunity of ownership. As previously in my previous company, I was actually robbed of my whole agency, and so I left the industry for a couple of years.
Real quick, Raza, real quick. You were robbed of your agency, and at the time, that company was not on an LOA model either.
Correct.
And you were
Yeah.
still robbed of your agency.
Yeah, I was getting paid directly from the carrier, so that has
It
nothing to do with it.
Doesn't make a difference.
Yep. And so when I saw Experior's transparency, my first Zoom was with Darren, my second Zoom with Jamie and Leanne. And one of the things I addressed was, hey, I want to be able to see the contracts and paperwork. And Jamie immediately shot me an email with all the documentation and said, hey, take it to your attorney, make sure everything, you can dot the I's and cross the T's. And I was blown away just by that, because none of the other companies even have a contract. They don't even have a contract that they can even flash in front of you, whereas Experior has everything in black and white, and that's huge for me. And especially it had the legacy ownership that I cherish a lot, because I can't be insured. I have a pre-existing condition, so my legacy and my insurance is my Experior's legacy plan.
Raza, good to see you on here, brother. Paul over here. Alex, what's your next question, bro? I think you said you had one
Oh,
more.
wait.
Yeah.
JB.
I got 13 minutes left. Let's see if we can get 13 questions in 13 minutes.
JB had a question. What is the rolling 12 EBITDA?
The rolling 12 EBITDA. Hold on.
We don't want to take 13 minutes to look up the answer.
Okay, it's okay. Rolling 12 EBITDA, approximately 13 million. Approximately.
13. Okay.
How old of a company are you?
11 years, but only in the U.S. for 5.
Oh, okay. Yeah, my other question was, how do you handle dilution from a shareholder standpoint?
You get bigger before you give out more shares. So as long as you're growing past what the dilution is, it's not a concern. Our value continues to grow every year. But we're a private company, so we have financials, but they're not audited financials. We're not a publicly traded company, so we'll share the information with shareholders if they like to see. But they're not, and that's where some people go, well, how can you say the value is this? Listen, I'm just giving you my speculative value is 150 to 200 million based on our EBITDA. But there's a lot of things that get stripped out of EBITDA, right? Yeah. I mean, you can strip out the fact that we invested one-time big lump sum dumps of money into this year, and that didn't get pulled out. Or if I retire and sold the company, does my income as a CEO come out of it? There's all these different. Would a new one replace me with half the income? There's a bunch of different metrics, and I'm not the finance team. Thank God, we've got an internal finance team, internal legal now. So, but yeah, they do a good job of it. I made it through high school. Let's put it that way.
That's awesome. Financial. I think you have a question.
Yeah, Sam's got a question. Go ahead, Sam.
Hey, Jamie, as a newer agent, what would be your advice to the newest agent?
Make a mess. A lot of agents, they're trying to figure out everything first. And I love what one of our great leaders says, Frank DeLeo. He says, you'll know what you need to know when you need to know it. And a lot of people try and learn everything first and then act. And that doesn't mean that you're going to sell a product without knowing it. I'm talking, get out there, meet the customers, ask the questions, find out what their needs are, bring that back to a trainer and say, hey, what should I do for this client? This is her situation, da, da, da. And then you go back and present. I'm a big believer of doing two-step sales. I'm not trying to sell on the first. I'm not a big leads guy, right? If someone's in the leads world, that's great. We're actually working on a division for that as we speak. Actually, I got a meeting tonight at 9 talking to some people about the stuff that we're working on. But in our market, the way that we work, it's typically a two-step sales approach. So you don't need to know everything to present the information. Hey, this is Experior. This is what we have. These are some of the carriers. These are the products we offer. Would you like to do an assessment of your needs? Yada, yada, yada. Gather information. And then we go back on a second visit for a close. So in that meantime, that couple days in between those meetings, that's when you're learning what do you need to do when you go back to sit with that client. But a lot of people want to know everything to do for that client as soon as they sit in front of them. And that's just not possible. There's so many moving parts. So I would say go out, make a mess, talk to as many people as you can. Go for no. There's a book called Go for No, which is good because a lot of us are trying to get the yeses and we get discouraged because more people say no. But if you just play a game with yourself, like, hey, today I want to get 20 people to tell me not interested. 20 people tell me not interested. If you start doing that every day, every few days, you're going to have a few people say, yeah, let me hear what you got. Or yeah, I'll sit down with you, right? That kind of thing. But it's all consistency. It's just like exercise. The reason why exercise sucks so much is because I can go home, lift some weights, go to the gym and get on my treadmill and look in the mirror, and I still got the same fat around my stomach that I had before I started, even if I go for 2 hours straight. Well, does that mean that working out doesn't work? No, it just means I haven't done it consistently enough, long enough, right? In our business, it's no different. If you want to get, healthy financially, you got to be consistent every day for a long period of time, right? And I think a lot of people, they're looking for that instant gratification, but it does take time, right? It's not overnight success.
We got like 10 minutes. Alex, are you good to go, bro?
I had another one, but I don't quite remember what it was, so I think I'll be fine for now.
All right, man. Have a good one.
All right. Nice chat with you,
Actually,
Alex.
I do have one. I remembered it.
Oh, shit, I just disconnected it. You come back up. You come back up. Come back up. That's cool.
I've got a question. Rumor mills, I've heard it from some people in the company. Jamie, are you primarily taking the income from your code or from salaries and Experior?
Am I making money from my code or from my salary? Is that the question?
Yeah, correct.
Well, number one, none of anyone's business. But number two, currently, I don't give a crap. Currently more from my code than from salary. And it's slowly, what we're actually doing is selling off our code to the corporation to increase the EBITDA. So we have an 8 times, it's called the strategic equity sale. We allow all of our executive directors to do it. So my wife and I, so that we're even more hierarchy blind than we already are. I don't look at Jason as a 10th generation or whatever he is to me versus, Billy Bob, that's my first generation. I've never looked at that. I never have, never cared about that. But in order for people to know that I don't do that, we're slowly selling off our code to the corporation. And we're doing it strategically over the next few years before we look at doing maybe an equity event for the company. So I get to sell a portion of my code just the way that anyone else in Experior gets to sell their code at an 8 times buyout. So we're doing that over time, but it's also better for the corporation as we sell that code. So then all of our leaders like Mauro Arturi, Darren Stephan Golka, Juana Veronica Jaime, like some of the guys that are currently direct to me will be direct to Corp. And they're already starting to because we're already starting that process.
I'm third gen to you, by the way, Jamie.
You're third gen?
I'm third gen.
All right.
All right, we got Alex.
All right.
Alex, what's up, man? Welcome back.
I'm back.
My bad.
So, okay. Do you have a securities division? Like, do you sell securities and stuff like that too?
Yeah, so it's through Global View Capital Partners, and they're if you look them up, Global View Capital Partners, and Dean and Dina Fliss are the founders of that company. They were former $1 million earners with World Financial Group. They left. They didn't like some of the stuff there. I guess things didn't go the way they wanted it. They were actually co-founders with Hubert back in 90 or 91, and we recruited them into the Experior model. So they're actually agents of ours, their whole company. Mm-hmm. But we decided, hey, you're bringing your 100+ agents to us. We're going to put all of our securities through you guys. So that's what we did. So we built that relationship with them.
Now, are they the custodian too, or do they have a custodian?
Yes, they are for some of their funds, not all. They
We got
allow
Nationwide,
they allow
RBC,
third party.
Nationwide,
They allow.
RBC, Fidelity, E-Trade, a couple of other ones.
Yeah, and they have their own, but they only sell maybe 30% of their own. The 70% are still through third party funds, like what Prickett just mentioned. And it's an RIA firm. We also do have the ability for the broker dealer, but it's not something that we have anyone in corp that's licensed for that. However, we do have a relationship with Dean and Dina Fliss to administer that. We just don't have the ability to pay overrides on it or anything else like that. But for the RIA stuff, we do. We have a full tiered structure and everything for people that want to get their Series 65.
Do you have any aspirations of being the custodian and or the what's the other word I'm looking for?
The dealer?
Yeah.
Yeah. Well, as I said, Dean and Dina Fliss are already, and us as Experior, no. Do I have aspirations of buying them? Yes. We're actually discussing some equity and stuff like that as we speak, and it's open because Dean and Dina Fliss, they're late 60s, early 70s, and they're still like Dina's like go. I mean, she works harder than most people I know, so they're not retiring anytime soon, but they are potentially going to be probably looking at a succession plan, and we're interested in buying a good chunk of them. So it won't be an Experior RIA, but we'll have some ownership in it.
That's cool.
Likely in the near future. Yeah.
That's awesome. And then
Yeah, Nick, we do have an RIA side. I'm actually halfway through my Series 65 right now, so I should be getting that here in the next couple months. Really,
That's
right
really
now,
cool.
become an executive director, Jamie?
that's really cool. How much do you see proportionate wise to insurance to securities being sold, like revenue wise?
Oh, like 99.9 insurance, 0.1% securities. But if you're talking annuities too, we do.
I would count that as it's not a security, but I guess you could count that as a security kind of thing.
Yeah, if you're counting annuities, like we're doing a little over 10 million a month right now with insurance premiums, and I would say with investments this month most months we're doing 30 million plus for annuities.
Nice.
So whatever that ratio works out to, but yeah.
Oh, awesome. Guys, thanks so much for letting me just bombard you and asking so many questions. I got to run as well.
Let me send you the AOA, bro. Give me your name and email. I'll get you the AOA. Let's get you going.
Hey, split the difference. Split the difference. Come on, man.
You guys are funny. All right, Pete.
Yeah.
All right, he's gone. We got a couple minutes, Jamie. You just want to take it?
Yeah, I'll close it out. I just want to say.
Tell them about your book, by the way. Tell them about your book.
What's that?
Tell them about your book.
Oh, yeah, listen. If someone ever wants to learn the heart of this company and learn about some of our leaders, 3 years ago, I wrote a book, and at the time, we had 1,800 licensed agents. I got approached by this ghostwriter lady. She helped me write this whole book. It was really cool. Became a Wall Street Journal and Amazon bestseller or something like that. It's really cool. I'll tell you why it's cool, because it kind of goes through like trials and tribulations, challenges that people faced as they were, building their business before Experior, and then challenges they went through building with Experior, and how they kind of came out at the end, with some with great levels of success, some just starting to experience success. But that was, as I say, it was 3 years ago. But the story really shares about who we are, what our beliefs are. It's kind of personalized a bit too. I got a whole chapter just on my wife, and so if you're single and you want to figure out how to find the best wife in the world, I'm like the world's greatest recruiter because I got her. But I'll just say that it's basically a biography on Experior, but more importantly, kind of the heart and soul behind it with many of our great leaders. So check it out. It's called You Can't Fall Off the Floor. And whether someone's joining Experior or not, I believe there's some great nuggets in there. And sure, a lot of it's recycled stuff that you probably heard before, but it's maybe put in a different way that you can relate to. So yeah, feel free to grab that. And by the way, I don't do it to make money, because I think I make 10 cents every time someone buys one on Amazon. So if you're cheap and you want it for free, just go to YouTube and type in my name and and at least subscribe to my channel, because I think I make $12 a month now on my YouTube channel. Um, but if you type in "You Can't Fall Off the Floor" with my name as well, you can actually listen to the audio version for free. It's on Audible, but if you want it for free, it's like a 4-hour read. I actually narrate the whole thing. It's on YouTube as well.
So Jamie, appreciate you taking the time. One of the biggest things that you're likely going to see from this is a lot of following to your page,
Cool.
a lot of DMs, a lot of messages. So if you know what to do with them.
Yep.
You know
Back to you.
Yeah, right.
Yeah.
And then,
Awesome.
do you know somebody named Roy Gory?
Rory.
Roy
Gory?
Gory.
Roy Gory? No, I don't.
No,
I'm not off the top of my head.
Roy Gory.
No, that doesn't ring a bell.
JB was saying say hello to him, but
Yeah.
I think.
Oh, okay.
What'd you
Maybe
think of
I
this?
can tell you.
You like this?
Yeah. What do you
Like
think
this
of
kind of
this?
open forum discussion?
Oh, I love this, guys. I'll do this. I'll do this freaking every couple weeks. I love this. This is a lot of fun.
We'd love to.
Hey, listen, man. I know some people are founders of companies and they're afraid to go live because they'll get called out on their bullshit, but I don't mind it. And by the way, again, thank you to Elisa and Alex for maybe sharing some opposing opinions or things or whatever. This is what makes us, this is what makes us all get better. Iron sharpens iron, and there's more than one way to do things. So appreciate it.
Roy Gory is the president of Manulife.
Oh, no way. Right on.
But anyways, I think
I should probably know that name. Sean would definitely know that name. I apologize.
Yeah, Sean would. Jamie.
Yeah, for sure.
Jamie, I'd love to have you on another live, probably in
Yes.
a couple weeks or something, and we can get
For sure. And I do got to run, guys.
Yes, sir.
I got to take a washroom break, and then I got to run on to my next meeting. But appreciate you guys. Have an awesome night.
Have a good one.
Thank you for joining us,
Thanks,
Jamie.
bye-bye.
Thank you so much.
You got it. Take care.
All right, we'll do. Bye. Guys, thank you very much for joining the live. And thank you, Pritt, for moderating. It was very, very good. Very, very good. So do we want to stay on, or do we what's going down?
I got a call starting right now. If you could hear that in the back.
Yeah, I did.
I had to let the guest in the Zoom before I hopped off. But let me handle that call, and if you guys are in here later, I'll hop back on. But I think that was pretty cool, man. I would, if he's still listening, and I'm not gonna get in trouble. I'm not a company man per se, but it's good to see somebody from a company come out and actually talk like that. At the end of the day, it allows all of us to be loyal to our businesses, our families, our agencies, and I'm proud at this current moment to easily say that I run Elevate Financial Agency.